Let's talk about drawdowns because nobody likes to talk about these and even less people like to show them. Look, this is my track record account here. I've showed you the strategy, and in this video I want to show you how to deal with drawdowns and how I'm dealing with it on this very public track record account. Okay? So when you watch the video until the end, you will understand the psychology behind it, the method behind it, and so that you can also take some value out of that, how to deal with your own situations that will arise. Look, I mean, this track record here, as you can see, it had like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 consecutive positive months, okay? So that's really good. We did have drawdowns in between, but every month was positive. So July 24 is the first month that was negative. And you can see already now in August, we're almost half back up of this drawdown. So what's going on here? Well, first of all, we had like seismic moves, right? We had the unwinding of the carry trade, of the yen trade. We had the Bank of Japan intervention. We had the CPI changes in the US. We had, you know, the raising of interest rates, obviously, in Japan. So all of these things, also cutting rates in China, all of these things impacted currencies massively. And I can even show you here the very trades. This is a small account where you can see the trade. So currently I'm still sitting in an Aussie CAD trade, and I'll get to that in a second. And you can see, let me just move my head here a little bit. I also had a bunch of Kiwi CAD trades. So definitely those were the trades where I got, into that. Those were the causing factor of the drawdown because they overextended. So for example, if you look at the Aussie CAD from a larger structure, you can see like we had a really constructive up move here, right? And then the contraction or the correction turned out to be a lot bigger, and you can see that big wick here. This is a daily candle that, you know, really was out of its usual proportions. And what I do in these situations is that obviously, first of all, I take a step back. So I don't just add trades indefinitely. You can see like we had here adding a couple of trades at some point. You don't do that. You do not increase your risk. So these trades, they were already planned as scaling into a trade in case the market corrects more or to the next zone and level. And this is what happened, and it even overextended. At some point, we're also having the situation that it extends so much that we start to trade the opposite direction, right? But you can see from an exposure perspective, it's just a partial exposure. And obviously now this trade is in minus, but nonetheless, you need to protect your downside at some point. And but right now, nonetheless, you know, you can see like we have half the drawdown is back here. If we see a push to the upside, those trades will easily make up for this insurance down here. But like I said, as we went down here, the market could have gone further, and then I would have added trades in the other direction. But you need to wait in these scenarios. If you add too many trades in too small of a range, you will have too much leverage, too much concentration risk in one price band, and that will kill you. That will kill you. That will eat you also in terms of costs, overnight costs, and like just, you know, you will have too much leverage on one region of the price. So you gotta be patient and you gotta trust your method. This is not the first time you're going through that. Regardless of the extent of time or even how big the move is, you have to have a plan. Like when this price happens, I will hedge that much, and so on and so forth. So just in the recent days, I started to add some activity again here. You can see here August 13th, August 14th. So we had like a couple of bunch of trades. So now we're starting to trade the ranges again. Within the ranges, so we're adding profits here. But as we're adding profits, we're closing out some of the open floating losses. So we basically offset and step by step reduce our exposure until we have all the trades taken out, and then we reset and restart the strategy just like it typically moves. But this now the focus is not on making as much money as you can, but it's protecting your downside. And as you see the market comes back to, let's just say, more of a regular rhythm like it was before we had these big spikes going on, then you start to trade the ranges again. We can see here also this is the Kiwi CAD market. So again here we see some proper pullbacks now that brings the markets a bit more into a balance, more equilibrium, and then you use the small profits to offset whatever open positions you have here. You don't hold these until, forever, basically. Also, like anyway, you can see that drawdown in comparison, look, the account is 10,000, so there's 500. So it's not that big of a drawdown in the first place, especially when you look at Forex trading. But this is how you need to do it. You need to have your psychology in place. You need to be patient. You need to have a clear structure as to when you re-engage into trading, when you just sit it out and you hedge yourself further out in case the price goes further. Maybe it continues to go down and down and down. Then you rebuild exposure to the other side and you offset your position exposures step by step by step. So this takes a good amount of confidence, also experience, and obviously a strong psychology. But when you have a plan, you trust your plan, you know how it's statistically worked out in the past, you're just adjusting it to the current volatilities and ranges, which have been, especially now with all these macro factors, quite out of the ordinary, but nonetheless, the drawdown is comparably small. And when we will work our way out of that too. So this is a small video here, a short video to explain to you how to deal with drawdowns of that kind. You never lose your structure. You always stick to your plan. You double check your data. You stay strong-minded and you are really disciplined, and that's how you do it. Again, no magic, no voodoo, but proper preparation, training. You're very trained. You know what you're doing, why you're doing it, how you're doing it, and all of these things. And then, the market does what the market does. It does it anyway. You have no impact over the market. So you have to put your focus on the things that you have control and impact over. And that is obviously what you are doing on the market. So as you can see, we have half the drawdown almost back. Let's see how things continue from here. But I continue to be very positive that we will reach new highs sooner than later. Thank you very much for watching. I'll see you on the next video. Bye-bye.